Well, hello and welcome. Very happy to be here and talking to my loyal YouTube subscribers. Let's jump straight into it. So, right now, the market is at a support level, as you can see, sitting on it as we speak. So, we have used this support level a few times. We had a double top here on the market, which is bearish, move back down to that level of support again. We'll see whether that holds. And then really what we use is our opening range. So the third Friday of the month just occurred, 18th of Feb. What we do is we put a high and a low on that day, the third Friday, and we also do it on the first trading day of the month, whatever day that happens to be. So we've got the third Friday, we put a high and the low. So if the stock market in the SPX, the index, is above 4394 and closes above that on the daily chart, we will be in bullish opening range mode. If we're below 4327, we will be in bearish opening range mode, right? Right now, we're below the 200-day moving average. So that is a little bearish in and of itself. And we haven't been below that 200-day moving average for quite some time, right? As you can see. So, and once we did get back up above that, obviously when the pandemic first hit, we just continued to use the 21 and the 50-day moving average as support. We've now broken all of that. That's all changed. We're now below the 200 and obviously the 21 and the 50, as you can see. But we've got an opening range for this week, so we will see. Some of the positions that we have on right now have earnings coming out. We're still more companies to report their earnings, so we'll wait and see how that plays itself out. A lot of economic news coming out this week. Consumer confidence will be important. We've got the Fed balance sheet. Analysts will dissect that. New home sales, jobless claims, and GDP, the total economic output of the United States as a whole. That will be very important as well. Durable goods coming out, and personal income and outlays, and consumer sentiment. So there is a fair bit going on this week. Not a massive economic news week, but certainly there is a lot going on there. We know right now that there is tensions between Russia and the Ukraine. If that does de-escalate, then maybe we'll start to see the SPX get back up above that 200-day moving average. Start to see a bullish opening range mode. Time will tell. So we will see what happens there. But just looking at the five major indexes that we track, the S&P 500, the NASDAQ, the Russell 2000, the industrials, and the transports, they're all trading below their 21 EMAs right now. So that is bearish in and of itself. But we will use our 92% accurate opening range on the SPX for this week, and we will see how that unfolds. So the major position that we're looking at for this week is Tesla, right? So let's have a look here at Tesla. So Tesla right now is back down at the 200-day moving average. You can see in the past that has been a support zone. Yes, it's been below it, but it's been that support zone. Remember, support is a zone, not a specific price. So that 200 has acted as support many times and is back down there again. With the valuation metrics that I use, I've got a real value of Tesla of $830.84. So anything below $830 is pretty good value for Tesla. So I'm going to agree to buy this below the 200-day moving average, that level of support, and below that intrinsic or real value of $830. So I'm going to agree to buy this down at $800. But before we do that, let's have a bit of a look here at the statistics of Tesla. So we can see here that the market cap is 905 billion, okay, which is pretty impressive. We've got a return on equity here of over 20%. So return on equity acts as a governor to the potential growth of that company without taking on additional debt, of course. So something above 20% is very solid and obviously a very well managed company and a company that's returning a profit for the or has a return for the owners of that company, right? People that have invested in that company. If you invest in the company, obviously you would want a return on your money, and a return on equity above 15% is showing a well-managed company that is returning, is making a return for the owners of that company, and also shows you a very strong potential growth rate there as well. Quarterly revenue growth year over year, almost 65%. Quarterly earnings growth year over year, almost 760%. My goodness me. And the total cash, almost 18 billion compared to the debt of almost 9 billion. So a lot of cash there compared to its debt, can withstand hard economic times, can invest in new projects, looking pretty good. Now, the institutions like it. Over 42% of institutions own the stock, or 40% of the stock is owned by institutions. Insiders, people that work for the company, right? We're talking the CEO, directors, chief financial officer, people like that. They like the company as well. Over 18% of the shares are held by people that work for the company. So that's pretty impressive as well. If we look here at the analysts, we want to look at the forecasted earnings growth, because that's what causes a stock price to move higher. Forward looking, market's always forward looking, we should be as well. And we can see here that the next 5 years per annum earnings growth rate is 21.7%. So that is very solid, very happy with that. We look here at the financials just quickly. We can see that the revenue from year to year is certainly growing at a great rate. And we look here at the cash flow statement, so we can look at the free cash flow. And we can see that that is certainly moving in the right direction as well. So fundamentally sound company, growing its earnings, forecasted earnings growth is very strong. Real value of $830. Anything below that is good value. We're going to agree to buy it at $800, right? So we're going to agree to buy it at $800. If you look here at their last earnings report, it says misses, but I don't think so. If we have a look here at the earnings per share, it's $2.63 compared to the estimate by the analysts of $2.26. So that's a beat. And they reported 17.7 billion in revenue compared to what the analysts expected, their consensus of 15.8. So that's pretty impressive, almost 65% growth rate on their revenue on a year-over-year basis. So pretty solid, right? So I'm very happy with that. I'm going to agree to buy it down at 800. How do I do that? I sell a cash secured put option. Okay. Now you could turn it into a spread if you wanted to, right? Where you buy a put below that sold 800 strike put for protection, reduce the amount of money that you need. So that's definitely a way of doing it. But my goal is to actually own the stock if it does go below 800. So I'm going to sell that. Now I can sell that 800 put for the 18th of the 3rd expiry for $33.78. So every 100 shares I agree to buy, I can bring in $3,378. So that's pretty good return. So about a 4.2% return. So I'm going to agree to buy Tesla at a 7% discount to what it's trading at. I'm going to bring in a 4.2% return for 25 days, and I'm happy to own the stock anyway, right? If it does go below 800, with a real value, or a minimum value for me, about around 830. So pretty good position. I'm happy to take that, and that's one new position that we are looking to get into. If you're looking for something new, that is an idea. So let's see what happens with Russia and Ukraine. Let's see what happens with our opening range, the overall market. A lot of stocks still to report their earnings. That's going to have an impact. A lot of economic news going on as well. That's going to have an impact. This week will give us a bit more clarity, and we'll see whether we are going to be in the bullish opening range mode or bearish, and if we do recapture that 200-day moving average on the SPX, which is important. All right, my friends, we will talk to you again next week. Thank you very much for listening. All the best, and bye for now.